And the thing that we're using it for is to create expectations, to put something on a chart and be able to say, I think that this is what's going to happen. Even if that doesn't happen, that's okay. We can always adjust and adapt, right? But you need to actively be practicing the art of anticipation, right? Using the concept. So, like we talked about with dollar, right? We saw um, that market structure break last time. We talked about how there was a nice market maker sell model. Okay, so um, we're just gonna map out the bottom of this order block instead of the change in state of delivery. Okay, so let's go ahead and put that up. And we'll put weekly order block. All right, cool. So once again, bearish on dollar, right? We can see that just like we've been talking about, if we want to find the market maker model, we have to find the key levels first. And here we are. There's that order block. Here's this weekly IRL. And then there's that weekly ERL. Okay, so that's our framework. Okay, and we're starting off with the dollar as our framework once again because we trade risk on assets. We want to be in line with uh, the macro, and that's what using the dollar is particularly really good at, right? So let's take a look at what happened on NQ, right? So as you guys can see, right now maybe everybody is not used to seeing accumulation look this way, but this is a very good example of how accumulation does not have to necessarily look uh, just like perfectly squared or rectangular, right? Sometimes it's something like this where we have the accumulation, we have a manipulation, and possibly distribution higher. Okay, so just taking a look at the kind of like broader power of three that's taking place here. But let's go ahead and let's zoom in and start mapping some key levels out. So first things first, guys, anytime you see relative equal highs or lows, you have to map them out. There's such important areas of liquidity. Um, and when you can see that that's where we're gravitating towards, you're going to always be mapping these out because especially on an intraday basis, when I see that Asia um, has equal highs and London went lower, New York has a very high probability of going back up to take those highs. So we have some relative equal highs up here that I'm very interested in. And we look a little bit lower and we can see that we did what? We took out relative equal lows, right? And in other words, who gets wrecked on this move lower? Whose stop losses are below here? Buyers, right? Anybody that went long just got destroyed here, right? And so whenever that happens, you want to kind of think to yourself, okay, who's next, right? Who's next on the chop block? And that would be short sellers, right? We start breaking down, short sellers are getting very confident, and now they start getting taken out, right? Now, these relative equal lows being taken out meets our prerequisite of hitting a key level before looking for any sort of reversal. We also have this volume imbalance down here um, that, yeah, is in discount, right? So those two things being put together. Now, when we talked about change in state of delivery and when we talked about order blocks in our last session, um, we talked about looking at consecutive candle closes, right? So these three candles. So you may be thinking to yourself, okay, in order for us to get a change in the state of delivery on the daily, we would need to close above here. But is an advanced extra concept for the order blocks. I want you guys to start thinking about it like this. Whatever candle it is that starts to engage the key level, being this sell side liquidity, we can look at the first candle to get closed above as our order block. So when we hit here, I'm looking, can we close above here? We don't. We make another candle lower, right? And we dip into this volume imbalance. Then I'm asking myself, did we close above here? Did we get a change in state of delivery, right? Which we did. So this would be classified as a bullish order block. We can use this one right here. Okay, so we'll look at a couple more examples like that, but just when we go down in price, I want you guys to see that this order block is where we kind of moved off of, right? So clearly price was in discount, right? If we take this range right here, let's cut it in half. Okay, we can see, let's actually reverse this real quick. We moved into discount, we had a change in state of delivery in discount, and then we move higher, right? So if we go down to the hourly now and we take a look at how this looks, right? We created the order block, we came back into it, right? We had a little sweep at 9:30, right? And 9:30, as all of us should know already, is a very key time. 9:30 is equities open, so we usually get a lot of volatility there. And you can see that 9 a.m. candle manipulates uh, below. If we jump to the 4 hour, we can see what we were using last time, right? Where um, we're not using Asia as our candle one this time, right? We're using the London 4 hour candle, right? So what happened? We manipulated below candle one, aka London lows, and then we close back inside of it. And then what happens? That next 10 a.m. 4 hour candle gives us a super clean expansion. We have IRL to ERL here. We have the daily order block. So today was easy longs. Um, longs looked really, really good today. So yeah, going back down to the 1 hour, we can see that it gets taken out. Actually, let's go down to the 15-minute. Okay, so once again, when that candle one gets taken out and then candle two starts forming, I'm looking for that change in stated delivery, which happened right here, right? And that's when I got in today. As soon as we changed in stated delivery on these candles, I hopped in here, came back into the order block, and then price shot up, and I was aiming for these Asia highs right here. Right, we also have some relative equal highs. We have nice low resistance liquidity. What do we know about low resistance liquidity? That shit gets sliced through like a hot knife on butter, right? So any questions about um, today's price action on NQ or that small new order block concept? Or is everybody on the same page? All right, cool. I will take that as everybody's on the same page. So yeah, going back to the daily candle, right? Today was also a candle three, right? So potentially also tomorrow might have another bullish day. We have a bearish order block up here in premium that we want to be careful of. But once again, just kind of reiterating all the stuff we've been doing, candles one, two, and three. Yeah, it is being recorded. I started recording it like a little bit late, but we got all the important stuff. So once again, that's what we were thinking about for NQ, right? And as you can see, the other two correlated assets also pretty much did the same thing. YM looking to be the strongest, surprisingly. All right, cool. Now we'll talk about everybody's baby, Bitcoin, right? Let's go ahead and map this out. All right, cool. So where can I watch from the beginning? We didn't go. The only thing that I really talked about in the beginning was that I noticed that some of the guys here that have been working on these concepts, some of them are just sending me like, hey, look, I found a fair value gap. I found a fair value gap. I found a swing high. I found a swing low. But the next level of that is saying, I think that we're going to key off of this discounted fair value gap and start to move back up into here. I can see an accumulation, manipulation, distribution taking place. You know, there are obviously like levels to it that you can start to add on as you become more proficient with price. Um, so that being said, so yeah, we're gonna start off with Bitcoin. We're drawing our standard deviations. We should already know by now that -2 to -2.5 standard deviations is our retracement slash reversal zone, right? We know that the 4 to 4.5 is our terminus, aka max expansion. And something that I held off on last time, that I didn't want to mention, I didn't want to give everybody information overload. We have the -1 to -1.5. Okay, we call this the silver bullet zone. Okay, now the purpose of this zone is to find places where to pretty much find where price signatures are going to form that we can use later. AKA, whenever I draw out this zone, I'm looking for, hey, there's going to be an order block or a fair value gap or a swing high. Something is going to form in here that I can use to trade lower after, right? So, like we talked about, right? We have these two up close candles. I'm ignoring the indecisional candle, right? We change in state of delivery here, right? We close below the opening price of this candle. Price comes back up, taps into it, shoots lower. Okay, so that's the purpose of the silver bullet zone. You don't need to use it, but in our case, I'm leaving it on right now because clearly, right, we had a market structure break. Why is it doing that to me? We have a market structure break here. These are high probability IRL right now. We just hit the retracement slash reversal zone. Now, me personally, right? If you guys are thinking spot, it's a great time to buy. It's always a good time to buy some spot if you end up in one of these levels. Now, at the same time, I'm more of the opinion that we will probably go lower. Um, that, like I said, instead of a reversal, right? I'm a little bit more of the opinion that we'll get a retracement back into that silver bullet zone and then potentially move lower. Mainly to this low is what I'm looking at. If we can take out that low, then I would be um, a lot more of the opinion that we've probably bottomed, right? Because we would have something like this super huge market maker sell model kind of taking place, right? So that's what I would be more of the opinion of. If we can also maybe set a low here and then sweep it and then start to move back up, that's also something I would be interested in. So pretty much something like this. We set a low, we sweep that low, and then we start to move higher. Um, but for the most part, right, the trend is down, right? If we did what we showed last time with the EMAs, let's go ahead and slap on those two EMAs, and we do the 7 and the 13 EMAs on the weekly. We can see, right, the trend is still down. Our bias should still be lower. Um, so yeah, I'm not. I mean, like I've seen people playing long. My bad, mic's disconnecting. I need to find the charger real quick. But like I said, I've seen people like hitting longs and stuff like that recently, right, on that little relief bounce. For me personally, it's like I always just want to be going for what's highest probability. Um, I like to have where, I'm not taking losses. The name of the game here, guys, is to have small, consistent wins and have even smaller losses, right? If your losses are, you could have a fucking 5-day winning streak and erase it in one day. So it really is a huge key that you guys are trying to make sure that your losses are, you know, not substantial, that they're very small, right? All right, let me connect this real quick. All right, cool. So yeah, definitely lower for BTC as of now. We don't even have like a candle 2 closure, we don't have anything really. and my opinion that's convincing. So if I had to take a guess of how this week plays out, I think that we stay inside of this range here. I think we print an inside candle, and then I think next week we probably get an explosive move higher to come back lower, would be my guess. Can we see ETH? Yeah, absolutely. Question: are you trading the same coins? Are you using a screener or BTC correlated coins? Um, I'm not really trading alts other than maybe ETH or Sol, just because the charts are going to be cleaner on the ones with more liquidity, you know. So, you know, if we have access to leverage, I don't really need to use something that's going to be more, you know, sporadic, unless I know something about the coin, you know, like I don't know, if I have some sort of like information of why a different altcoin might go up, then yeah, I'll trade it, but for the most part, no. And I don't use a screener either. I just take a look around. All right, so let's take a look at ETH. So if for BTC we're looking mainly at this low back in August, right? Then for ETH we're looking at this low kind of back in March, almost August. Um, to me, this is where price is headed right now. Okay, that's the overall draw, right? And once again, let's toss up that market maker sell model. It's not the prettiest, it's not the most like right on the ball, but it's pretty close, right? So this is what I see for ETH right now. We have a high probability bearish fair value gap right here. That's the one I'm kind of expecting to on BTC that we move into and then start moving lower. Now, if we inverse it, then okay, we can start, you know, flipping our bias because it is possible. Um, when we start getting more advanced with the profiles of the market maker models, right? The different things that can happen in a market maker model. There are times where when we go under stage one, we can reverse from here. And it does happen sometimes. But we have not seen anything that would maybe convince us or really indicate to us that, yeah, like now we're ending the sell side of the curve, right? So we're looking for a move back into here. Let's go ahead and draw our standard deviations. Okay, notice, right, in the silver bullet zone, we have the bearish order block and we have this um, IRL inside of it, right? Notice that the 2 to 2.5, I'm looking left and I'm looking around for what we may reverse off of uh, or retrace. Here is a fair value gap, right? There's a little piece of this fair value gap that's inside of it. And we have a sell side liquidity very close to it, right? Which I'm mainly eyeing the sell side liquidity personally, unless we can get a nice candle 2 closure or something like that. But right now, it's just pure bearish candles on the weekly, right? We don't want to start getting long in the middle of a bearish expansion, right? Uh, don't try and catch the knife unless you have a lot of experience catching the knife without getting cut. So for Sol is gonna be a little bit different. I would probably opt for the monthly, or actually, yeah, we're gonna use the monthly. We're gonna take this whole range. We're gonna cut it in half, right? We can see the premium and discount. Um, we just took out this low. We're moving into this fair value gap. But the thing is, right, is we're gonna need that candle 2 closure to indicate to us that we are reversing, right? Because look at candle 1, candle 2, candle 3, right? Candle 1, candle 2, candle 3. So we're gonna need to look for that same thing if we are gonna be of the opinion that we're gonna start moving back higher, right? But we just took out this low, which was a pretty significant low. Um, because we took out that low, I'm actually not as fond of Sol right now to trade for shorts. Um, just because like, we already took out this low as well. So the next would be this weekly fair value gap all the way down here, like 40 to 50. Uh, but yeah, so for Sol, I think same thing. Probably get some sort of like relief rally back up into this weekly high probability fair value gap, and then send lower again, probably into the low that's going to get formed here. Any questions on Sol? Any questions on ETH? I often get questioned on where to keep the standard deviation 0 to 1 to check the -2 to -4 level. Can you explain the rule? Yeah, for sure. That's a great question. So essentially, I'm looking to frame the manipulation leg, right? The last manipulation leg before the expansion. So let's just take off these EMAs real quick. So in this case, right, we have a move up, takes out this swing high, right? That's very important, is that when we're framing manipulation legs, we usually want to see that it's taking out something, whether it be a high or a low, um, but we want to see that, right? But notice, we have a move higher before a market structure break and expansion lower, okay? So we could do the same thing here, right? We go lower, right? And then we take out this low, and then we have a market structure break. So then I would anchor my standard deviations to here, right? And we can see the -2 to -2.5, that is where we reversed, right? Does that make sense? Could do the same thing down here, you could use this one if you wanted, right? And then notice the standard deviations also line up, right? Which makes it a little bit higher probability. Okay, so um, yeah, that's what I'm thinking for Sol. Pretty much just bearish. Yeah. So yeah, Sol's a interesting one, right? Because I'm not gonna take this. Okay, I'm not gonna do that, right? This would be ridiculous. The -2 is at -$38, which not possible, right? So the next thing that I'm doing, if there is no manipulation leg I can get here, is either I'm gonna drop down a time frame, right? And then I can get something like this, right? And as you can see, after max expansion, we had a nice little rally back up, right? And then another move lower. Either I'm gonna do that, or if I stay on the same time frame, then I'm just looking for the next leg, right? Which I could take this one. From this low to this high, we can look left, we can see that there's a low here, right? Let's see where -4 is at. It's at fucking $2. I'm probably not gonna use that one, right? Instead of using the one that's all the way down at $3, right? I don't think that's very likely that that happens, and I'll just use this one, right? I'm looking for manipulation legs. How do I know that this is a manipulation leg? Simply, if the true if the true intention of price was to move lower, I'm looking for the last time it moved higher and it created a leg, meaning from swing low to swing high. Okay, so that's the way I like to think of it, right? If price's true intention here was to go up, then these moves lower, right, are manipulation, right? We move up, we retrace, aka manipulate into IRL, right? And then we expand higher. We manipulate slash retrace back into IRL, and then we expand higher, okay? So you're looking for that last opposing move, essentially, okay? Let's take a look at gold. So gold was a really interesting one, guys, because take a look at this, right? It would have been very easy to start to get bearish, which it would have been good if you were bearish at this point, right? So like let's say we were at this point in the market. Once this candle closed, it's good to be bearish, right? We still have to remember though that if we turned on those EMAs, we're definitely above it, therefore our bias is still technically up. But when we get a candle close like this, that's when we can start considering taking counter trend plays, right? Because um, the first target is usually going to be candle one's low, right? And we can see that we have a fair value gap in here, right? We have a order block here. We got our order block, right? So, when that next candle formed, right? We got our, oops, let me put this lower. We hit the order block, we hit the fair value gap, and then we started to make a candle 2 closure. Very close. So we didn't exactly close in it, but we did respect the fair value gap, and we did respect the order block, and we printed a reversal candle, right? And as a result, um, price has been moving higher ever since, right? And we went long. Remember, we went long on this inverse here. Okay, now I didn't actually take the long, but I did call it out to everybody here. We hit a weekly level and we got our 4-hour confirmation in form of an inversion fair value gap. We went long, we put our stop at this low, and aiming for this high is like a swing trade, right? Just giving examples so that you guys can see when if I take a trade from weekly to 4-hour, it's gonna be a swing trade, right? But so far so good. Definitely worth taking some partials when we get to 1-to-1. If anybody did take this, so inside this fair value gap looks like a good spot. But overall, we're probably gonna book it back to those highs. But as you can see, right, we got our change in state of delivery here. We come back to this order block that's overlapped with a fair value gap, like we've been talking about. When we layer these we're not using a lot of price signatures, guys. We're not getting fucking crazy with it. We're using 2, right? Actually, in this case, could even technically be considered 3 because of the inversion, but we have the order block with the fair value gap, reversal candle, right? Um, Taking out this 4-hour candle 1, right? And then look at candles 3, 4, 5, 6, 7, 8, 9, right? All of those expanded higher, okay? So gold looking bullish. Um, yeah, we had a really nice candle close back inside, right? So like I said, it's very easy to get bearish when if you guys are just using the candle closes like I taught you and you're not taking in the broader context of the market or taking profits at reasonable places and you guys went short and you're just going to stay short regardless of the fact that we're hitting key bullish levels on a higher time frame inside a discount, then you're going to get wrecked. But you could have gone short up here, taken profit at this fair value gap or the order block, and then waited for this candle close, and then you could have been positioning yourself in candle 3. But in the one that we showed, that was candle 2, right? Can we see a low time frame analysis in the 4-hour to 1-hour? Yeah, sure. Um, we can look at one of the first ones that we had kind of called out, right? Which was going to be this. So I know I'm starting from the weekly, but um, I mean, we can show one where we don't start with the weekly, but anytime I do use the 4-hour, I'm usually, my high time frame is going to be the weekly. So we go from the weekly, right? We have a candle 1 and a candle 2 closure back inside of candle 1, right? And then let's go down to the 4-hour. Okay, so we get a move inside of this bearish key level. We get our inversion here. And then we can drop down to the 1-hour and start looking for reasons to go short. Right, so we move in, or we create that inversion, right? We get a market structure break here and here. We could have used this for a value gap right here because it also happens during London. Okay. And yeah, let's see if we can find an example just using the 4 hour and 1 hour. Okay, let's turn on the kill zones. All right, they're on. Cool. Let's see. We have a change in state of delivery here. We have a fair value gap mixed in with it. We're not going to mark it out though. Um, let's go to the 1 hour. Alright, so we move into that key level. What's the next thing I can look for my confirmation? I can look for the inversion. So we move up into that bearish key level, right? And then we create an inversion here. So that's a potential for me to go short. Put my stop somewhere at one of these highs. I would probably be taking a partial here, and then just going for 2R, right? So that's an example using the 4 hour, 1 hour. I saw it go from 5500 to 56 in a 15-minute candle, then retrace. My gut feeling was telling me short, but I couldn't because it's trending bullish. Wish I did now. Um, I mean, what, you wished you shorted, or you wish that you went long? Because, like, I mean, yeah, you could have made money going short here, but um, like, I'm of the like general opinion that right now, that was the sell side of the curve. Now we're in the buy side. When we get like a move like this, it's not super clean, but it is still on the buy side of the curve, right? So yeah. All right, cool. We can just like take a quick glance at these and see. Yeah, I mean, we had this weekly inversion, right? Once that weekly inversion took place, we retested it and we're just sending lower. Tau looks like it wants to go 140. Hype, uh, as we saw last time, hype hit our level that we were really looking at. If I would probably still be bullish on this chart. I don't see anything, well, other than that weekly two candle closure, right? But I would be looking for a retrace, not so much a reversal. We mapped out our premium and discount levels last time, right? So let's see. Okay, so I'm not gonna take the whole thing. I'm just gonna take that. Um, we retraced into it. We moved back up. I mean, yeah, I wouldn't see us want to go lower than this down close candle. Uh, but I still think it will probably go higher. But yeah, let's see. Ada. I mean, we didn't even draw anything just because fucking. I mean, I don't even need to say anything about this one. Alright, cool. So let's talk about SMT a little bit, right? We'll get like a little introduction because we have 15 minutes. So SMT, okay? Smart money technique, okay? Um, what is it? It is a crack in correlated markets, okay? Now, once again, there's a lot of stuff that we're going to talk about that it sounds a lot more complicated than it really is, okay? What is correlated markets? We can think about BTC to ETH. We can think about NQ to ES. We can think about Euro and GBP. We can think DXY, risk on assets. Okay, so crack in correlated markets, right? Let's take a look at some examples of what we mean here. And the easiest way for you guys to find SMT is by using and looking for SMT inside of candles 1, 2, and or 3. So let's see if we have any SMT on the daily um, at this swing low, okay? So let's notice that yesterday, or Friday, sorry, Friday set a swing low here, right? Let's take a look at YM. Friday also set the swing low, okay? And so did ES. So we don't necessarily have SMT there. But, and this is going to be kind of like the tricky part for SMT. Take a look at these lows, okay? Notice that both of them were taken. This low coming in on Thursday, the 18th of December, right? Well, actually, let's use this one. Let's see if there's SMT here. Friday, the 2nd January. Friday, the 2nd January. There it is. Okay, so notice that low gets taken out. YM's does not, right? This is a crack and correlated market. And when you use this, we're using this as a confirmation tool. Anytime that we do get SMT, we can start to consider to ourselves that a true reversal is taking place. This is something that we're going to be working with the next few days, talking about this because it's a very important concept. Yeah, and you should think of it as divergence. Think of it as divergence with correlated markets. So take a look at this low here. This low gets taken out on ES. On YM, it does not. Okay. When you find SMT like this, you can have a much more confident time when you're trading, right? And we can also find SMT on something like the 4 hour, okay? Where maybe on NQ we took out London's low, but maybe on YM maybe we didn't, which we did in this case. Let's see. On ES, we did not. So if you notice on NQ and YM, we take out the low. ES, we don't. When I see that, this small SMT right here on the 4 hour, now I start to get very interested in price because that crack in correlation, even though it's the last thing I look for, it's going to give me confirmation. It's going to make my trades a lot more higher probability. Another thing we can do is we can even throw on ES on here to see SMT a little bit, um, which I don't personally like using it like this, um, but there's a lot of people that do. So as you can see, right, if we look at ES, line goes up. If we changed maybe this to a also a line chart, we would see, well, I guess you can't really see it too well here. Let's see if we can find a good example. We're gonna skip the line chart for now, but just know that you can use it. I'm not super familiar with it just because I like using the candles better. Maybe it's one of these. Yeah, I mean like looking at this going lower and this one going higher, like I guess that's how you would use it. But for me personally, like I would much rather just do something like this, right? Where I can see the SMT, right? Went higher, went lower, right? So what we're gonna start doing, right? Like I said, one of the easiest ways to find SMT is just looking. Hey, on NQ, we formed a swing low here inside of a fair value gap. YM did the same thing. ES did not. Another thing that it actually tells us is which asset is lagging and um, which one is stronger, right? So if we think of it like, hey, ES did not take out London's low, NQ did, then we can say that relatively speaking, ES is going to be a bit stronger. Okay, does that make sense? If NQ went lower than ES did, then ES should be stronger. It should be the preferred asset to trade, which you can still trade NQ. It would have been still nice today, but you know, it's higher probability uh, to trade ES in most cases, right? So let's take a look at a 1 hour view of what it looks like, right? And what we can start to do here, right, is we can start looking for SMTs on lower time frames, or we can look for, hey, after SMT, right? And this is what I did today, and I traded NQ. You know, like I said, you can still trade the other assets. There's no problem with that. After that SMT formed, right, where this low set in London does not get taken out, but this one on NQ does, now I'm saying if we get a change in state of delivery here, it's going to be a lot higher probability because of this SMT. SMT lows or SMT highs should not be taken out, okay? At least during like this day. Later on it will get targeted, but um, this day when I saw this low get formed, it's a protected low for me. We form an order block here. We took out a low. We have SMT, right? So very, very easy trade for me. And this is what I took today. Well, my stop was somewhere like around here, I think, right? And then I was aiming for Asia highs. And I took two candles instead of one. Hmm. I'm not sure what you mean by that, but we can show, yeah, for sure. I'll leave it up for like a minute. But yeah, so just like as a basic introduction to SMT, um, 4 hour candles. Mm, but like, I don't understand. You want to see my session settings, like the settings of this indicator, or are you maybe talking about this other one I use sometimes? Oh, did they take his down? They might have taken his down. Oh no, they didn't. Maybe you're talking about this, where I can see the higher time frame candles. But yeah, so like I said, Kraken correlation in correlated markets. This is going to be one of the ways, guys, that we start looking for true reversals. You took last time 4 hour candles and you said that each candle can be oh, okay, okay. I understand now. Yeah, so I mean, just like generally speaking, right? Um, the 2 a.m. candle, right, is London. 6 a.m. candle, New York. 10 a.m. candle, also New York. 10 p.m. candle, Asia. Okay, so I don't have like settings for this. I just know that the 10 p.m. candle is Asia session, that the 2 a.m. candle is London, and the 6 a.m. is New York, and 10 a.m. is New York. So is the 2 p.m. one, but it's afternoon session, and um, in the beginning I would focus more on morning session, post 9:30, even maybe post 10 o'clock sometimes. But yeah, so any questions on the SMT is also available on ETH, right? So let's take a look here. We have high time frame SMT, right? This is one of the ways that I was pretty confident that we're gonna go lower, right? Especially when we get this high time frame SMT, high time frame change in state of delivery. This up close candle, free for shorts. Candle 2, candle 3, and then candle 4, right? Did that answer your question, John? All right, cool. If you guys sent me charts or anything, I'll probably respond to these in the DMs. If not, we'll go over it in tomorrow's session. Um, just make sure you guys tell me if you're comfortable with me sharing it or not. Yeah, yeah, SMT is probably one of the more complicated concepts, and it's a lot harder on the eyes than everything else that I've taught. But the good thing is you don't need it. Um, but it does increase your win rate, and it can be coded as well. So, um, yes, it's divergence between correlated markets and yeah, one of the easiest ways you can look for it is using candle 1, 2, and 3 because you can always find it um, in there inside of that those three candles a lot of the times. Let's see if we could just find a quick example. Mm, let's see. I mean, yeah, I mean we're kind of already showed, but I do not understand how you understood that BTC will go lower and not that ETH will go eventually higher. Um, well, you know, if we go on the weekly, right, we draw out our standard deviations, and this is gonna be another really cool thing for us guys. Like, I mean, this like really fucking blew my mind when I learned it, but we can anticipate SMTs to take place in the standard deviation zones. Okay, so how did I know that it was gonna go lower? We just swept all-time high, right? Um, ETH failed to do that, right? And I'm pretty sure that's also at its -2. Yep, right? ETH fails to do it. ETH has a market structure break, right? Creates an order block change in state of delivery. We have the divergence, right? We have the SMT there. So I'm not just using SMT on its own, right? I'm building it into all of the other contexts and all the other things that we typically do. Okay, what time frame are you checking out? Yeah, it's the last it should be the last thing that you look at, right? It's a confirmation tool. 15 minute. Okay, let's see. Um what is the I think for well we would probably be using the dollar index. So when I'm looking for SMT using USD JPY, I'm gonna be using the dollar to find SMT. Which, like I said, guys, it's a new concept, so don't beat yourself up if you can't find it yet. It will take a little bit of time to train your eyes. Like I said, it's one of the more difficult concepts that we've gone over, and we're just barely introducing it today. Yeah, there is SMT here, right? We have this low being taken, and this one is not, right? And remember, guys, you want to do remember, we're building a thesis, we're building reasons why price should go to a certain place. If you just use this willy-nilly, it's not going to work very well, right? Using it using these 4-hour candles, using it in a key time, right? Using framework and confirmation and all stuff like that, and then adding it in, that's what's going to change the game for you, okay? So we'll spend tomorrow talking more about SMT, and then we can start moving on to um, precision swing points, right? Because so far we've just been talking about uh, still kind of the basics a little bit. We definitely have some advanced stuff in there for sure. Okay, cool. Yeah, I haven't checked his out. Um, but yeah, that would be nice. All right, so any questions, any coins you guys want to look at before we're out of here? Yeah, I mean, I don't really use quarterly theory, but SSMT is a good it's a good concept for sure. He definitely has some good concepts in there, which we'll eventually go over it. At least the ones that I use personally. But all right, cool guys. Um, if there's no more questions or no more requests, yeah, yeah, he's good, bro. All right, guys. Yeah, definitely we will. We didn't spend too much time on it because I think the market update probably ate most of our time, but that's okay. It's the beginning of the week. It's Monday. Market update's a little bit more important. But all right then, guys. Stay safe, trade safe. Good luck on everything, and yeah, we'll meet back here tomorrow. Appreciate everyone coming out.